Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Jindal Steel and Power Limited, hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities. Thank you, and over to you, sir.
Thanks, Stephen, and welcome everyone to JSPL's 3Q results conference call. I will hand it over to Nishant Baranwal for introducing the leadership team and taking the proceedings further. Over to Nishant.
Thank you, Anupam. Good day, everyone. We welcome you all to our conference call to discuss the 3Q FY22 financial results. Today, we have with us our Managing Director, Mr. V.R. Sharma, and our President Finance and Acting CFO, Mr. Vijay Gupta. To start the call, I would request Mr. Sharma for his opening remarks. Thank you.
Yeah, good afternoon, ladies and gentlemen. I welcome all of you on this particular virtual meet. So, first 9 months have been excellent for our company if we take the overall results. The gross revenues, you might have seen, it is 39,600 crores. The Ebitda is more than 12,000 crores now. It is 12,210 crores. Net profit, that is PAT, that is 7,086 crores. We could produce 5.9 million ton steel, but we could not dispatch 5.9. We dispatched only 5.6 million ton steel, and we could carry forward the inventory. This is because of non-availability of on-call rakes and also the transportation, surface transport intricacies, especially for the availability of trucks and trailers. But we feel that we are on the right track. We gave a target to our team about a year back that we want to reach to 15-50 target, that is 15,000 crores and above should be the Ebitda in a year, 15,000 crores and below should be the debt level, and 50,000 crores plus should be the sales turnover. So in if you see in the calendar year, we already achieved it. We are at more than 51,000 crores of sales turnover in the calendar year, and we have already crossed 15,000 crores of Ebitda. We have already brought down our debt level to a level of around 11,000 crores. So that also we have achieved. Now way forward in this current financial year, up to 31st March, we have to reach to from 12,210 crores to we have to add another say around 3,000 crores to reach to that 15,000 crores Ebitda level, which we have targeted earlier. And 39,600 crores is sales revenue, and we have to add another 11,000 crores. But we will be doing much more than this. Hopefully, we will be concluding the financial year with 54,000 crores of sales turnover, with 15,500 to 16,000 crores of Ebitda level, and a profit accordingly 7,086 in 9 months' time. So we are contemplating that we will be touching somewhere about 8,800 to 9,000 crores. The steel production will touch somewhere about 8 million ton, very close to the target, maybe 8 or 8.05 million ton. The sales will be 8 million ton or maybe 7.9 million ton, depending upon the availability of the surface transport like trucks and trailers, and also by rail. We had been doing excellent export during all 9 months' time. We are going to maintain our export targets to about 28 to 30% in times to come also. There have been many challenges in last quarter, especially the input cost price increase because of the energy cost is going up. You are seeing that in Europe, the energy cost has gone more than $25 per MMBTU. UK alone is about 20 pounds per MMBTU. The energy cost in terms of power, the electricity, that has gone in equivalent to Indian rupees about 60 rupees per unit to 100 rupees per unit, which is a very high and abnormal cost. So that impact has definitely impacted the entire world. The geopolitical issues in between Russia and NATO countries, they are also creating some disturbances and ripples in and the overall energy market in the world. Hopefully, the world governments, G20 summit, G20 countries as well as NATO countries are negotiating with China to ease down the situation. If that happens, then in times to come, the oil prices and the gas prices should come down. And finally, the coking coal prices and the coal prices may also see a slightly dip in the month of March and also in the month of April. So as a large company, we always maintain a pipeline inventory of coking coal, steam coal, and also for the other products like diesel, oil, furnace oil we use in our plants. So we are expecting that the overall freight cost should come down in times to come, the domestic freight as well as the international freight. Today, Government of India has allowed 10 to 15% of ethanol addition in petrol. That will also ease out the situation. Thanks to the Finance Minister, she has already declared the coal gasification as a priority project. And we and JSPL, we started this project of coal gasification. We commissioned in 2013. But during 2014 to 2018, we could not take the fullest advantage of this coal gasification because the coal was not available. So thanks to Coal India and Ministry of Coal, they have now increased and ramped up production. We are expecting that they will be doing more than 800 million ton this year. And the private miners will be doing about 300 million ton. So total country will be producing about 1,150 million ton or 1.15 billion ton of coal, though the country's requirement is more than 1.5 billion ton coal on the basis of the calorific value. So India will continue importing about 200 million ton of steam coal and about 50 to 60 million ton of coking coal, which is likely to take place in future. But today the coking coal prices are at the peak. These are the ever highest prices, $445 from Australia, and that means about $28 to $29 the freight. By reaching to the Indian East Coast is about $475, and the West Coast is about $485 to $490 a ton. So this is a very highly abnormal price, and this is because of the COVID situation in Australia especially, and the miners were not working fully. There were only one shift. People were working because of lockdown situation there, because of the COVID, Omicron. Now I think the situation has improved worldwide. Most of the governments have taken a decision that will keep the economy open, will not stop, neither will stop, nor we will put any lockdown. So this is a very bold step taken by different governments looking to the financial crisis worldwide. And India, I will still say, thanks to Government of India, they had kept all the power plants on, so they could avoid the blackout situation in the country. And thanks to Indian Railway, who could transport coal from one location to another location on pan-India basis, so that there is no power shortage. And the MSMEs and the steel industry, as well as the other engineering industries, they are working. There is no dearth of power as of now. Hopefully, this will be maintained on all India level. The average coal availability with the thermal power plants is ranging, average is about 7 days, but ranging from as low as 3 days to 15 days. So, but it depends upon, that is the management what Government of India is doing. I'm sure under the leadership of the Ministry will be in a position to maintain the supply chain so that the energy shortage does not appear in the market. The other area is we are now looking that the budget, it clearly specifies that government is going to spend more and more money on capex and also on infrastructure projects. So the declaration by Finance Minister that the new capex can come up to, for the greenfield projects, can start production up to 31st March 2024 as against of 31st March 2023 to avail the benefit of 10% reduction in the income tax from corporate tax from 25% to 15%. So this has given a boost to the Indian industry, and most of the projects which were half-heartedly going on, they have restarted because now it is easier to catch the production by 31st March 2024. We are still having 25 and a half months time. So this is a very bold step taken by Government of India. We appreciate this step. So this has given an impetus to the demand of the steel immediately. The day the budget was declared, or after that, within 7 days' time, we have seen the demand has increased. And today we are facing that the demand has outperformed the production. So this is something very new. So thanks to government policies. the linking of the rivers, which is likely to take place very soon, and the Jal Nal Yojana of the government, where we need larger diameter pipe plants to transport water from rivers to different cities, and then from there after purification to each and every house. So this has also given an impetus to the overall steel industry. Government is also bent upon under the Gati Shakti plan that how to increase the speed of goods train from 30 kilometers an hour today to average speed to 70 to 80 kilometers an hour. For that, the government needs to improve the condition of the tracks. So laying dedicated freight corridors or putting new tracks may not be feasible immediately, because it takes about 8 to 10 years time for one dedicated freight corridor to come and to get into operation, because a lot of rehabilitation, lot of land acquisition, a lot of issues are there. A lot of bridge making, and all these infrastructures are required to be done when we make the dedicated freight corridors. So instead of making dedicated freight corridors, government is opting another policy that why not to upgrade the existing railway tracks and to speed up the goods train speed from 30 kilometers to 70 to 80 kilometers an hour. If this happens, then definitely the Gati Shakti will act very fast, and for that the benefit will come to a company like ours, because we are the only company in the country who is making 1175 head hardened rails required for the high-speed rails, and we are the only company today who is supplying material to the rails to metro system in the country. There are total 27 metros coming in the country, small and big, in each city. So all these railways are advised by Ministry of Housing and Urban Development to buy domestic rails, make India Atmanirbhar. Apart from that, the huge investment is going on in the northeast states of India and also in Jammu and Kashmir. So apart from these two states, the government spending through BRO on the China border, that is also in a big swing. So this is definitely going to improve and increase the steel consumption across all the companies in the country, and the steel outlook looks to be very, very positive. And finally, if you see the overall investments in the field of steel construction, building by steel construction, so this is picking up. This idea has picked up very well in most of the metro cities and the adjoining suburbs of the metro cities. And now people are getting away from brick and mortar solutions to the steel building solutions, which is faster and which is more rugged in terms of seismic level, or in terms of earthquakes, even up to 8 or 8.5 scale cannot destroy the buildings, because that is the technology available today in the country. The pioneer in this particular industry are the two cities. One is Hyderabad, that is Telangana, and the other is Gurgaon, and also NCR, the other part NCR, that is Noida. So now we are finding good inquiries from cities from Mumbai and also from Chennai and Bangalore. I think this idea is picking up. Now there are more than 7,000 railway bridges are likely to come, which are going to consume only steel. And if this happens, then definitely steel production and steel consumption in the country will come up. We will be ending up this financial year by producing 118 million ton steel in the country, and out of that about 12 million ton will be exports. So 102 million ton will be 102 to 104 million ton will be consumed within the country. There is a shortage of steel today in the country because of two reasons. One, the iron ore availability is still a challenge. That is one. Number two, the scrap availability is the biggest challenge. Government is trying to encourage the recycling economy or the circular economy, but that is not happening because the scrap is not available. The scrap today in Turkey has reached to $500. This means in India, by the time it reaches to about $560, $575, that means the steel which we can produce from the scrap route to be about 50,000 to 51,000 rupees a ton. This is a very highly abnormal prices, but nothing can be done. Over and above the energy shortage, there is a shortage of scrap in the world. The reasons are two. One, because of very heavy snowfall in Europe and also in part of America in the eastern part, the scrap collection has reduced dramatically. And the other area is because of the COVID situation on the west coast of America, the scrap collection has reduced. Over and above, each and every company today, they are looking to how to be ESG compliant and how to reduce the carbon emission. So they prefer to produce steel through electric arc furnace route than producing through the blast furnace routes. So that has increased the scrap intake by the steel mills. The Chinese government has already started using more and more scrap. Chinese government has also declared that any new investment coming in the steel, 50% of that will come to the electric arc furnaces. So it's a very positive sign. And China is reducing the blast furnace route production to manage the ESG conditions in their country. If that happens, which is already signaled very well, then there are 4 countries which are likely to get the benefit of the Chinese market and also the Chinese share in the international market. These 4 countries are: number 1 is India, number 2 is Iran, number 3 is Ukraine, number 4 is Russia. So these 4 countries will get the cake in terms of getting the market share, where China used to export. So we can find the good markets as a replacement market with Chinese steel worldwide. So that experience we are already seeing today, and this is coming true. Hopefully, very soon, maybe next few weeks' time, the automobile industry will be in a position to recoup in a much better way, and they will be in a position to start producing because the chips are available now, and most of the manufacturing companies, they have addressed this issue. Apart from that, the green energy like solar and also the wind energy segment, we have seen a great jump in terms of buying plates from us for the windmills, and we are now waiting as to how the 2 leading players in the country like Adani Group as well as Ambani Group, they start manufacturing or they start generating, I would say, the clean energy, which definitely the steel industry will be interested in buying from them, so that we can also reduce our ESG or we can also reduce our CO2 emission. So this is what going on. So thanks to Government of India for reducing, for giving a special benefit to the coal gasification units and giving the discount of 50% discount in terms we have our own mines and 20% if we buy from the outside. So this is very good, and I'm sure the GST committee is working today, and the coal cess, which is about 400 to 500 rupees a ton, that will also be abolished. If this is done, then definitely the steel industry will be in better hands and better way. Coming back, last point, the market scenario. In November, the market was pretty good. December, because of the fear for Omicron as well as for lockdown and some very unusual rain in the southern part of the country, the steel demand came down because the stockists and the traders, they were not interested in stock the material beyond a limit, because they were apprehending that maybe tomorrow if the lockdown starts, then they will be stuck up with the inventory. Similarly, the MSMEs and also the other industrial players, they were not interested in buying because they were also fearing that if the lockdown starts, then their labor will go back to their homes. So thanks to the Prime Minister and also the all state chief ministers who have taken the decision not to put lockdown conditions in the country, and it should be tackled, managed, and organized in such a way so that there is no chaos. So, Government of India and the state governments, they are worth extol in this particular matter, and they have managed it very well. Over and above, the country has gone through a rapid and mass vaccination. I think now most of the senior citizens, they are vaccinated, and even the citizens above the age of 25 years are also vaccinated fully. And now it is coming with the teens. So I think in times to come, the boys and girls 11 years to 15 years will also be vaccinated in a big drive. So overall, I am looking a very, very positive outlook. Yes, in December, the prices came down because of these reasons. And in January, it was quite stable. By the end of January and February now, the prices have increased. Just to give you an outlook of the prices, today in November, the steel prices in Bombay, Delhi, Chennai, these were about 66,000 rupees a ton, landed hot rolled coil plus GST, and today it is at the same price, 66,000 rupees to 67,000 rupees. In between, it came down to as low as 63,000 rupees. TMT rebars, they from 59,000 rupees came down to 50,000 rupees, and from 50,000 rupees now it has come up to 60,000 rupees, and landed price on pan-India basis is about 63,000 rupees. So this is a great recovery done by steel industry and also by our customers, because the demand has outperformed the production. And this situation, this delta is likely to remain, at least for next 2 to 3 months' time, unless some new facilities are added, which is very unlikely that immediately this cannot be done. I'd also like to tell you one more news, that more than 45 million ton steel is produced through the induction furnaces route, and these people, out of this 45 million ton, at least 20 million ton, they are dependent on scrap. Unfortunately, they are getting scrap nor they are getting DRI, and they have reduced their production by 50%. So total put together in 1 month, we produce about 10 million ton steel. Out of 10 million ton, 4.5 million ton comes from the secondary route or the small players, and this 4.5 million ton, 2.25 million ton comes from the people, those who do not have their DRI plant, and out of that they are working on a piecemeal basis. So there is a net shortage of about 1.25 to 1.5 million ton per month in the country. So this 1 to 1.25 million ton per month shortage in the country is a huge shortage, and that all is in long products, because all these induction furnaces route people or the manufacturers, they are primarily in the long products, be it rebars, angle, channel, structures, beams. These are the products. So this 1.25 million ton of shortage is existing from January itself. So in this quarter, there will be total 3.75 to 4 million ton of shortage as per my estimates. If that is the region, today there is a shortage of steel in the country. Even in the remotest areas, people are now buying material from the major producers, those who have glass furnaces and those who are not dependent on the scrap itself. So it's all from my side. Going forward, whatever your questions will be there, I'll be happy to reply. My team is there with me, and we all are here to listen to you. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, may we request you to rejoin the queue. The first question is from the line of Ashish Kejriwal from Centrum Broking. Please go ahead.
2 things. One is, in fourth quarter, in today's interview also, you said 20,000 rupees per ton Ebitda from 17,500, which we reported in this quarter. So is it possible to bridge the gap, how we are seeing it in terms of what kind of assumptions we are taking?
Yes, please. So thank you very much, Kejriwal ji. It is very much possible, because only January first half was a little depressed, but after 15th or 16th of January, post Makar Sankranti, we found a good demand in the market, and by the end of 31st March 2022, we are contemplating that our average for this particular quarter should be 20,000 rupees a ton. As I told you, the TMT rebar prices have moved up at least by 9 to 10,000 rupees a ton. Plate and coil 3,000, 4,000 rupees a ton. Long products like billets, etc., 5,000 rupees a ton. Round billets 5 to 6,000 rupees a ton. So we produce about 2 million ton per quarter. So in this 2 million ton, the average, which is likely to be, that will definitely, the delta will be more than 2,500 to 2,800 rupees a ton. 17,400 rupees per ton was our Ebitda in the last results we have declared. So we feel that the fourth quarter will definitely be more than 20,000 rupees a ton.
Sir, I understand, but just to clarify, this is you're talking about price, and coking coal is still on an upside. So don't you think that average price will be somewhat offset by higher coking coal costs?
No, coking coal will not increase now, first of all. Secondly, we are maintaining stock for 3 months of coking coal. So what we do for the actual cost sheet, that is a very methodological costing, because whatever is in pipeline, so I am treating that material in pipeline is likely to reach here in next 3 months' time. So that cost we have already factored. And on the basis of that, we feel that our operations will be stable and our input cost will remain stable. There will be no increase in input cost. As far as the other area other than coal is the iron ore. So iron ore, we have already done a long-term agreement with the OMC, and our own Kasia mines have already started production. The another factor I'd like to tell you, which is a very positive news, though it at arm's length, we do all transactions as per the international practices. That is, we have already started our coking coal mines in Australia, and coking coal mines in Mozambique are doing extremely well, as well as South Africa. So this SAM theory, that is South Africa, Australia, and Mozambique, with this we are 50% covered in terms of self-reliance in coking coal. So what we'll be doing in case anything required, and in case there is any gap, that will be maintaining or bridging it through our own resources than buying from the market. So this is the reason I'm so confident that we are telling you that we will be achieving this 20,000 rupees per ton or more in this particular quarter on an average.
Yeah, that's great, sir. Sir, second question is, you mentioned about debt position also, that 7,000 crore at the end, in the February beginning. At the end of the quarter, we have around 11,000 crore. And within a month's time, is it possible to share what happened? It's inventory liquidation, or how this 11,000 becomes 7,000 at the beginning of February?
Yes, please. You have answered my question at least by 75%. First of all, the inventory, we were maintaining more than 300,000 tons, which was finished goods inventory against the confirmed orders payment received. So that inventory we have liquidated almost, and this will bring definitely the additional revenue. And the other is, if you see in totality, we are going to produce more than 2 million ton in this particular quarter, reaching 8 million ton. With the economy of scales, we will be in a position to maintain our prices, maintain our input cost, and will also be in a position to maintain and generate the Ebitda which is required. For example, till 31st December, Ebitda is 12,200 crores, and though the undeclared Ebitda, if we say in next 3 months, will be at least 4,000 crores. So 12,000 crore plus 4,000 crores comes towards 16,000 crore. But with all humility and humbleness, I am telling 15,500 crore we will do in this particular financial year. With 15,500 crore, I'm sure we'll be in a position to generate a PAT of more than 8,000 crore, which is now 7,087 crore rupees in first 9 months' time. So that is a very conservative figure. So with having 8,000 crore rupees in the kitty, or maybe 8,500 crores in the kitty, and then bringing down the debt level to this particular level of by end of March will be less than 5,000 crores. And then way forward, we are working. Next year, we have taken a target to produce 9 million ton steel. We got the 1 million ton extension or the increase in the overall environment clearance last year. And we will be achieving that, we will be utilizing that benefit, and will be producing about 9 million ton next year. If you see the last 3-year story, from 5 million ton, we already reached to 8 million ton. The growth is more than 36%. And this now from 8 million ton reaching to 9 million ton, this will be again super growth, I would say. So this is what we are contemplating now. Yes, please.
Yeah, that's good, sir. The only thing is 7,000 crore number, debt figure at the beginning of February is right.
So, Ashish, we would not want to comment. As Sharma sir was giving you a tentative figures, we would also like to say that any forward-looking statements made on this call are subject to market risk and how the market behaves. We are in a cyclical industry. So they should be looking.
And lastly, sir, in terms of Jan volume, you mentioned that market is undersupplied and shortfall is there. But despite that fact, we have seen domestic volume declining from December to Jan. So are we seeing that there will be a substantial jump in February volume for domestic market?
They are already done. It is already, we are seeing it already, because government is bent upon investing in infrastructure. So this is a very good sign. And the other point is not only JSPL, but also other companies, our peer group. We are all busy nowadays in exporting material to Europe, because Europe is passing through a very, very bad phase of their life. With $25 per MMBTU of gas, they never had it, because they were enjoying $3 to $4 per MMBTU. Domestic connection were at just $2 to $2.5 per MMBTU. Now from this level to $25 per MMBTU with $85 to $90 of barrel, the petrol is not available. You might have seen in the news that government of France, they have issued to the poor people, they have issued the coupon, discount coupon to buy the petrol. So, in such a critical position, they are unable to run their steel mills. So we are today busy in exporting material to all these countries where the energy crisis do exist.
Yeah, that's great, sir. Thank you and all the best.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, thank you for the opportunity. Just continuing on the previous discussion and taking a step back, I just want to understand in 3Q there was a massive increase in cost across items. So is it possible to share what was the key per unit increase in cost of the key items of raw material and also consumables? And only on the cost front, how do we see this panning out in fourth quarter? A bit surprised to hear that fourth quarter we will not be seeing coking coal cost increase, where most of the other steel companies are guiding for a decent increase.
So the point here is I'd like to clarify, the fourth quarter is already, in terms of buying coking coal, is already ended. Because anything what we buy today, it will not reach by 31st March, first of all. The second is, whatever material is in the pipeline we keep at least 4 months of material. So 4 months of material means we know the average cost of this 4 months of material which is already in the pipeline. Pipeline means the material under loading, material in the sea, IC, material at the port and material at the plant. And as I told you, we are going to ramp up our production in Mozambique and also in Australia, because Australia, the first vessel has already come to us. Now in all subsequent months, we'll be bringing 2 vessels a month. So this is again a very, very good move, and that's why we are telling that our cost of coking coal will not increase in next 50 days. So then we will see in the next year what is going to happen. That we'll take a call maybe in the end of March. But I'm sure the coking coal prices will come down because they're at its peak today, and these are unsustainable, non-sustainable for the whole world. The whole world is working on this, how to reduce the energy cost. Already the prices in local coking coal in China, and coal from Colombia, coal from Ukraine, coal from Russia, coal from South Africa, and coal from Indonesia are giving the signals that the price is going down. So I'm sure the prices will not go up, but the prices will remain either stable if we consider the pipeline, or we will see that in April the overall price level will be less. So as far as the costing is concerned, yes, there was a gap of about $40–45 of coking coal prices, which we factored already into costing. But it is not only coking coal prices, the prices for refractory, prices for freight, because oil prices have gone up from $68 to $88, $20 of jump. It was a huge jump. So the furnace oil prices, refractory prices, ferroalloy prices, all these prices had gone up. But now we are looking that the prices are either stable or they are going to find a negative or say declining trend, and once it happens, then there will be a respite to the industry, and our cost of manufacturing will come down. I'm pleased to inform you that we are already booked till 15th of March. We need to book another 16 days of orders, and this financial year will close. So we know that what we are going to do, what our cost will be. With 8 million reaching to 2 million ton production in this particular quarter, we will reduce our cost of production at least by 1,000 to 1,500 rupees a ton, and taking a pragmatic view that whatever material is in the pipeline, that will suffice the requirement not only up to 31st March but up to end of April. That's why we are working on this particular factor, that yes, the cost will be controlled, and the manufacturing cost will be brought down, and the margins will increase.
Okay, understood. Second question is, for our annual capex numbers for this year and next year, has there been any change? If you could just reiterate that. And also, our interest cost is still very high. I mean, the entire deleveraging benefit is not entirely visible in the interest cost of around 470–480 crores per quarter. So is it possible to share some guidance on how we see the interest cost shaping out in the coming years?
Though the reply will be made by Mr. Nishant, but I'll tell you a few sentences before that. First of all, thanks to our shareholders, thanks to our customers. In last 1 year time, from BBB minus, we have reached to a level of AA minus, and by 31st March, I think we will be AA plus. So this is the target what we had taken about a year back, that how to reach to A. But we reached to not only A plus, and then AA minus. So now how to reach to AA plus, that numbers are already in place, and I think we'll be in a position to convince the rating agencies to look into it. And this benefit we have already started getting in terms of a very low interest rate. We have a very solid team, banking team with us, and they are working on this particular factor. I'll now ask Nishant, please throw the light on this.
Sure. Thank you, sir. So if you were to look at our interest costs, in particular, if you look at the rate of interest, if you were to look at the third quarter in FY21, we were close to 10% at that point in time, Sumangal. And as Sharma sir said, the steady rise in the ratings and also the willingness of the banks to do business with us has actually brought it down to close to 7% as of the reported quarter. So that's a big jump. And coupled with that, the amount of debt that we've repaid, both these factors should actually start looking up, and you would start seeing the benefits come in. If you were to already look at our numbers, they are progressively down substantially. And as we go towards our net debt free target, you would see these come better.
All right.
Just to add one more point here, because we are not isolated or insulated from the world economy. As you see that the Fed rates are changing every day. By March, people are saying that the rate of interest will increase. How it is going to affect the market, share market, stock, bond market, that is yet to be seen. But looking to the conditions in India, looking to our overall total debt in terms of $1 billion, that is about $501 billion, and the reserves of more than $635 billion, and the economy is growing at a rate of 9.2%, which we feel personally, I'm in the opinion, we may even go for double-digit growth. So this is a very, very wonderful time for the India, for the country as a whole, and the worldwide, the geopolitics is going to settle. This is not going to be alarmed. So I think the time coming is much better time for Indian companies, for Indian incorporations, and we'll be in a position to maintain the better numbers in times to come. Not only JSPL, but the entire industry, not only steel, but even the metal industry, automobile industry, the construction industry will be booming, and then we can reach to 10% growth. Otherwise, we can't reach 10% growth. So 9.2 ongoing, and looking forward for 10%. I'm very much bullish that the country will reach to those levels of double-digit growth. Thank you.
Sure. And also just to add to this, we also need to be cognizant as analysts that as our business grows, definitely our working capital needs are growing, and therefore we are doing more and more business on LC, and on so all those charges would also be actually reflecting in the numbers that you see as the finance cost. So just need to be cognizant about that also to an extent. Sorry, I cut you off on CapEx.
Yes. You were asking the capex for the particular quarter, or you were asking for the future view?
Yeah, both. For this year, any change in our overall budgeted capex for this year, and then FY23-24?
So except for the Kasia Mines capex, there is no major capex in this particular financial year that we already done, and more than 800 crore rupees. And the next is the overall capex as a greenfield project to avail the benefit of 25% to 15% tax benefit, that is 10% delta. So that we are now starting our spendings. So this will be about 18,500 crores. We are going to be the lowest cost of installation plant in the world, I would say, in the world, reason being not only because of our efficiencies and our team, but also because we already have land bank available, we have electricity available, we have water available, we have railway network available, we have roads network available, we have colony, school, hospitals, everything available in our plant, and we have very good location, which is strategically just 210 kilometers from the port, and 217 to 218 kilometers from mines. So we are laying a pipeline, that is slurry pipeline. It's already started. I think more than 10-kilometer pipeline has been laid in last few weeks' time, and we want to complete this 217-kilometer pipeline by the end of this calendar year. And the moment it comes, we'll get an additional benefit of 1,250 rupees per ton in terms of freight, because the slurry pipeline transportation cost is only 100 to 150 rupees a ton, whereas the cost of transporting by trucks, it is about 1,250 to 1,400 rupees a ton. So that is highly unpredictable, and so much of quantity cannot be transported. That's why we are putting this slurry pipeline. So this 18,500 crore, what we are going to spend in next 3 years' time, already we have spent a little with our own equity, and we will be spending in another 2 years' time, total 18,500 crore rupees, which is well within our business plan to reach to a level of 15 million ton steel company by 2024. And we are on it. And with the accruals in hand, which are likely to be more than 8,000 crores year-on-year basis, so spending 18,500 crore rupees in capex, it does not disturb our overall working, and otherwise we don't have any other plans.
Sure. And as for the number for the capex, for the 9 months, we spent close to 1,000 crores.
Got it. Thank you and all the best.
Thank you. The next question is from the line of Kirtan Mehta from BOB Capital Market. Please go ahead.
Thank you, sir, for giving this opportunity. 2 questions from my side. First is, can you explain the usage of Ebitda during the quarter? So we had around 3,000 crore of Ebitda, but net debt reduction was around 200 crore. So could you just explain through the cash usage? And can you also give a similar position for 9 months as well? The second question is about the status of the pellet plant in terms of sort of the intermediate milestones. Could you guide us on what milestones has been achieved till Q3 and what are the likely milestones for the next quarter? Thank you.
Sorry, could you repeat the question?
The second question was related to pellet plant, so it was not clear. Can you please repeat?
The second question was about the pellet plant in terms of what are the could you give us more light on the intermediate milestones in terms of what has been done so far and what are the next milestones to be tracked?
So Ebitda total consumption or allocation, that Mr. Nishant will tell you, but I'll answer your second question first. That is pellet plant. So we have 2 pellet plants in Bourbon. So both the pellet plants are running at the fullest capacity, and we are using now captive use. We are not exporting any pellets nowadays. And we are adding one more pellet plant. That pellet plant is coming in Angul, and this pellet plant will suffice the need of Angul plant at least by 50%. So in that case, 50% will be using from Angul plant itself, and another 50% we'll take from Bourbon. Now coming back on the milestones, yes, October 2022 is the deadline to start the pellet plant in Angul. Hopefully by December 2022 we'll stabilize it. The benefit of this pellet plant will come to our balance sheet in the 4th quarter of this financial year 22-23. Now I'll request my colleague Mr. Nishant, he will reply you on capex allocation, where did we spend the money.
Sure. Hi Ketan. So basically if you were to look at the Ebitda that we earned this time on standalone was close to 3,168 crores. The allocations was as follows. We actually repaid loan of around about 970 crores. The interest outgo was close to 470 crores. Then there was a tax outgo of 800 crores. In capex, we spent around about 500 crores. Then Cassia, as we reported in the notes also, 870 crores was the cash outgo there. Then there was a working capital, actually, as we've written that there was definitely inventory stocking. There was close to 450 crores which got stuck up there. And pretty much it. So that was how we spent it, if that answers your question.
Thanks, Nishant.
Sure. Thank you.
Thank you. The next question is from the line of Kamlesh Bagmar from Prabhudas Lilladher. Please go ahead.
Yeah. Sir, one question on the part of how much increase we are going to see in the coking coal cost. So that is one question, because a lot of like qualitative numbers, qualitative things were spoken, but nothing on the quantitative side. So how much in dollar terms it would be an increase? And apart from that, what was the NSR at the exit, like say NSR at the December end? And what are the NSR current levels? Because 20,000 rupees per ton increase or the EBITDA per ton, it's not clear that it's a more of an aspiration or like say the Q4 numbers you are seeing. So it's honestly not clear on that part.
Yes.
And with regard to the inventory which you are saying 3 months, and so every steel company does that. So there is no rocket science in that particular part. I think so.
I agree with you. There is no rocket science, but yes, there is something different we do. It is very difficult to tell you now, but yes, if you come separately, then we'll tell you. There is no rocket science, but there are some tricks, I would say, the technical tricks, how we are maintaining our price. Like I was just one example for your comfort, like $445 per ton is the price for the prime hard coking coal. You'll be surprised that in Raigad we use 0 prime hard. And in Angul we use, because the blast furnace is bigger, we use only 25% prime hard. This is where the trick is. And that is supported by our own mines in Mozambique, where we do a proper blending. That is our proprietary formulation. And this is how we keep our cost into control. But your first question, that what is the total cost increase in terms of coking coal? The coking coal cost increase for the prime hard, $45 per ton. So this is what I think I tried to answer you. The another point is, unless we have the aspiration and wishes, we cannot achieve. Yes, you are right. It is our aspiration. It is our wish, which is a very positive wish. And we will achieve it. We will achieve 20,000 rupees per ton of EBITDA in the last quarter. When we meet in the month of April, then definitely we will work on this. We will discuss.
And sir, on the like exit NSR and the current NSR, if you can.
Very simple. No, I told you in my brief introductory remarks, but I will repeat. In November, the flat products or rolled coil prices in Bombay, Delhi, Chennai were at a level of 66,000 rupees per ton to 67,000 rupees per ton. In December, they came down to 61 to 62,000 rupees a ton. Today, it is again 66,000 to 67,000 rupees a ton. So whatever was there on 23rd of November, that week, 23rd November to 30th November, that is regained and that has been given by the market today. So this is one. The secondly, as I told you, the net NSR for, and I not answered your question fully. NSR in flat products was 63,500 rupees a ton. NSR, that is ex our factory plus the freight and GST extra, and loading charges and unloading charges at the customer end also extra. So NSR was 63,000 to 63,500. Today it is 64,000. So in between it was as low as 58,000. Now coming back on NSR of rebars, rebar NSR used to be about 56,000 rupees a ton in November. It came down to as low as 50,000 rupees in December, and today it is 60,000 rupees ex our factory, that is NSR. So you see the journey from 50,000 to 60,000 is 10 rupees delta. And even if we take from the peak that was 56,000 to 60,000 is 4,000 rupees delta over 23rd November. So I hope I answered you. 2 points are left. One is billet prices. The billet used to be sold at 44,000 rupees a ton. Today billets we are selling at 54,000 rupees a ton. There is an increase of 11,000 rupees a ton. So that is another big jump. Then it is angle iron structures and channels, beams, etc. Average price used to be 62,000 rupees a ton in November and 60,000 rupees a ton in December or early in January. And today this is at 68,000 rupees a ton. So this is where the difference is. As I told you in my opening remarks, there is a shortage of steel in the country, and yes, there is also increase in input cost. So the steel demand has outperformed the steel production, not only in the country but worldwide. because the reduction of the steel consumption, steel production by China has played a very, very significant role. As I told in my opening remarks, the 4 countries which are likely to get the benefit of this particular move of China, that is India, Iran, Ukraine, and Russia. Hope I answered you.
Okay. Sir, just one suggestion, because a lot of these opening, like say remark like 20,000 rupees and lot per ton, because if we see 17,500 rupees EBITDA per ton, which we have done in this quarter, and the cost is going to go up like roughly around 2,000 rupees in next quarter. And on top of that, we are saying that our margins would improve by 2,500 rupees, which means that our realizations need to increase by 5,500 to 6,000 rupees. And honestly, we are at similar levels of NSR for the quarter average. So
no,
it's really
I
not clear that
your all points are valid except one. The cost is not increasing by 1,500 or 2,000 rupees a ton. It is cost neutral calendar. The quarter.
Sure, neutral would be more on the console level, not on the standalone.
No, on the standalone level.
Thanks, sir. I will take it off.
Yes, please. Yeah, sure.
Thank you. The next question is from the line of Prashant Kumar Kota from Dolat Capital. Please go ahead.
Sir, thanks for that. So if we were to sell our coal from Mozambique, South Africa, and Australia in the outside to the external party, versus the current FOB Australia coking coal price of $450, what will our realization, just to get a hang of what is the quality and what is the grade, and just to get a hang?
First of all, we are not selling coking coal to other parties. So whatever we produce, we bring to India, into our company, for our captive use.
Yes, sir. I got your point. Just to get the grade, as in, what is the where do we benchmark that as in for our
grade is similar to any other mines in for prime hard and hard coking coal, which are mining, those who are mining in Australia, the same grade. So you know what happens? I'll tell you. The difference there are two differences. One is there can be a difference in freight cost. We have to transport to the nearest port, which consumes about $11. And then we bring it to India. That is another point. The second is we are not washing the coal there. So we are doing the washing here in India because the washery environment clearance is yet to be taken, and then we'll put up our washery there. So at the moment we are bringing coal with ash, and then we are washing it here and using it. And that's why we are not selling this coal to anybody. But we have coal washery in Mozambique. There we bring washed coal from them, and the washery rejects are sold to the international market, but the prime coking coal is not sold in the market. Similarly, in South Africa, we have anthracite coal available, which is a family of coking coal, and which is utilized in sinter plant as well as in blast furnaces. So there also, we are utilizing this coal for our internal use, and sometimes we sell to the domestic market also when the market is upbeat. Whenever we feel that the delta is very high, then we sell within South Africa to the ferroalloy producers, otherwise we bring to India.
Understood, sir. That's helpful. Sir, and what is the volume to be expected in FY23? Coal volume from all the three mines?
Coal volume from all the three plants, we should have about 1.2 to 1.4 million tons. And this is what we have taken into business plan, very, very conservative. It may go up, but at the moment we have taken this much.
Thank you.
Thank you. The next question is from the line of Bhavin Cheda from Enam Holdings. Please go ahead.
Hello, can you hear me?
Yes, please.
Yes, sir. I wanted to know
Mr. Cheda, if you can speak closer to the handset, please. Your audio is too low.
Yeah, now it is clear?
Yes.
Yeah, sir. Australia mines on 95,000 tons, we were profitable in this quarter, though partially because of the higher coking coal prices. If you can guide on the cost of production achieved at the Australia coking coal mines in the quarter, and how are we planning to reduce that cost going forward?
Sure, Bhavin, I'll take that question. This is Nishant here, and thanks for the question. So if you look at the past quarters since when we started in November, you'd see that we were actually running a run rate of around about 30 to 40,000 only, and therefore you got that 90,000 only in the last quarter. But if you were to see us now, we are close to 60 to 70,000 tons per month. That is what we are producing right now. And at present cost, I can tell you the idea is that the aim is that by March and April, we should get to 110,000 per month. At that, we should be at around about $84 costing, approximately.
Unwashed. $84 unwashed, and there's always you can say 15 to 20% of ash. So if you bring it down to half, like 10%, so it is about $95 or $97 per ton. And the freight is about, say, $30, so $126 the price, actual price, hitting to the Indian ports. So as against of, you know the figure today, $400 plus.
So roughly sub $100, and again, in case of grade, if I understand correctly, normally you get realizations which are 55 to 60% of the premium hard coking coal prices?
No, it is not that. You see, first of all, we have to see that if you want to sell, then the game is different. But if you want to use at your own, then there is a cost, then there is a match for the high ash or unwashed coal. So we maintain that. Yes, you are right. It may be about 45 to 50% of prime hard coal, but it keeps changing. It keeps changing. When the prices are upbeat, there will be different price. When prices are low, it's different. We follow the index.
Sure. My second one was on the capex plan. If I was reading correctly, earlier you had planned to spend roughly 2,600 crores in this fiscal, but I think you said you spent 1,000 crores odd in 9 months and 800 you plan in Q4, so your capex run rate would be less than the earlier expected thing?
So, Bhavin, as a forward-looking statement, would not like to comment that yet, but yes, you're right. We had guided towards a 2,400 crore capex for this year. We will be below that, is what we envisage.
And then the last one was the 5,000 crore net debt run rate is assuming.
Bhavin, we lost you.
Sorry.
So seems like we lost the connection for the participant. We move to the next question from the line of Ritesh Shah from Investec. Please.
This is the last question that we can.
You can take two questions or three questions, no problem. Please carry on.
Sure. Yeah. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Sure, sir. Thanks for the opportunity. Sir, a couple of questions. One is, how is the trend on the export realizations? You indicated that exports is something which is doing well. Are exports as lucrative as domestic sales? How should one look at that?
Yeah. So the first thing I'll reply. You had some couple of questions. Is it only one, or do you want to move?
Sir, I'll take one by one because all are interrelated.
Okay. So today, if you see today's market, then the export realization is about $50 per ton higher than the domestic market. So hope I have answered your first question.
Okay. Sir, second question is on costing. I think we were surprised with the cost increase on a sequential basis. In the prior conference call, we had indicated that the cost increase for coal will be nearly like $80. And you had given similar commentary that we have visibility on what is it that we are going to use. You indicated similar comments for Q4 when you have indicated flattish cost inflation when it comes to coal. So just trying to understand what went a bit different, because the cost inflation, what we are looking at from Q2 to Q3 was definitely higher than what we had indicated. If possible to provide some color, that would be quite useful, sir.
You see, as I told you, the energy cost is not in our hands. The entire world is working on this. If you see the total in 1 year, from $95 per ton, the prices have gone to $450 a ton. So this is a jump which you cannot say it is a quantum jump. I mean, it is a disaster in terms of coking coal. The world is working that how to stop using coal, how to declare that coal is unfriendly, and the world cannot move without coal. That is also there. So the reason for this increase is known to everybody. The geopolitical issue in between Australia and China, that is one. And the other is the COVID situation. This may be artificial, may be actual, but the production from mines is less. So I think the industry as a whole is unable to accept this kind of prices. The alternates are being developed by most of the people. Like as I told you earlier in my reply, that we are now in one of the plants, we don't use any prime hard coal. And the another plant we were using at 40% blend, and now it is only 25%. We'll bring it down to 20%. So this is how we can reduce our total cost. And we can optimize on other areas. Now we feel that the cost in this particular quarter is not likely to increase because we know that what are the contracts we have done and where the prices will move. And hereafter, I'm not seeing any increase in the prices in terms of coking coal prices or the energy prices, because the world is struggling like anything, and all heads of different governments, they are working how to control the energy prices. Though the campaign taken for EV, that electrical vehicles, also for green energy or the hydrogen, green hydrogen, or wind energy, this is a little distant dream. We are also working on this, everybody is working on this, but still the fossil fuel cost should not increase more. This is for sure.
Also, Ritesh, if I can add to this, two more points is, as you rightly said, we had estimated it to be lower last time, but what is missing is that there is this 120 crore differential that you are able to see between the consol and the standalone numbers, and that is on account of coal which we have not been able to use pretty much in our operations in India, the benefit of which will actually flow through in the coming quarter. So that's one part. The other is also the higher cost for coal that you see is because we had to use, given the paucity of coal, for the thermal coal for power plants, a lot of that thermal coal was actually allocated there, and we had to use imported thermal coal to run our DRI operations in this quarter. So therefore, all those factors actually led to this slight increase, what you spoke about. I hope that answers your question.
Sure, Nishant. Sir, last question. You had indicated 50, 15, 15. It is something which is already done with. What is the next target that you have in mind? And specifically, given we have already outlaid a capex plan for next 3 years, 4 years, we have a lot of cash. When do we expect a policy framework wherein we actually talk about buybacks, progressive dividend payouts? Sir, first is on 50, 15, 15. What next? And the second question, sir. Thank you.
Thank you very much. So 15, 15, 50 was a well thought target what we took. But now, each time we cannot give a particular slogan that this will be this time like this. So, but definitely we are working on improvising day by day. So the cost pressures have been there, so we have to reduce the cost, of course. We have reached to a level from where there is no U-turn. So with more than 50,000 crores of sales turnover, perhaps there are not many companies in the country with these ratios of 15, 15, 50. There can be only 7 or 8 companies as per my information in the entire country in private sector. So we feel that we are amongst at least, if not 7, we are amongst 15 top companies in the country today with those kind of numbers, bringing down to net debt to Ebitda ratio to a level of less than 1, that is 0.7. And with the support of all of you, with the support of our customers and our dedicated team, we have brought it down from 8.5 level to 0.7 level. So which is a remarkable achievement. We were at a BBB minus, we were at the threshold of D, that is default, and we have brought our company from level D to AA minus, and now we are looking for AA plus. So this is where the company's strength is. It is not out of fluke. We cannot say that in one quarter there was a profit and then after that this has died down. So if you see from the first quarter of 2020, to now the last quarter of 2022. All these 8 quarters, if you see our performance, it is one of the best performance in steel industry by any steel industry in the world. I can vouch for it. And you will not find companies with BBB minus outlook in April 2020 to a AA minus or AA plus in January 2022. We have yet to discover such companies in the world map, if there are some. The another factor is we were, as I told you, without spending any money, without hiring people, without firing people, we have reached to a level of from 5.5 million ton to 8 million ton. That is 2.5 million ton increase in production and sales, which is also unheard in the steel industry anywhere in the world. You all are you are specialists, you discover so many data. You can see, you can Google it, you can find it. If you find, then kindly also let me know so that I can also update my knowledge. But it does not mean that we are complacent. Our role model is Apple. Apple keeps on increasing the price on each and every model. They have $3 trillion market cap. They are $385 billion of sales. And they're still, when they graduated from Apple 11 to 12, there was increase in prices, 12 to 13. Now there's a super increase in the prices, and they also stopped giving the chargers. So that is a big thing. So the Apple is our monitor, mentor, and this is how we do it. And I'm sure you'll see this company will keep on growing. Our aim is not just to look that, yes, what will be the share price today and what is tomorrow. The price does not matter. What matters most is how healthy you are. So from a total consolidated debt of 45,900 crores, bringing it down to 11,000 crores, it was a Herculean task. With all the support of our shareholders, stockholders, or the government agencies, bankers, our lenders, and our staff, our technicians and engineers, and our financial team, we could reach this. This is the reason, this is the point what Mr. Nishan, my colleague, has told you, that we have reached to a level of 7% interest rate. I used to pay 12% and even up to 13%. There was a time. So you have to see a holistic view of a company, that how in last 8 quarters, 7 quarters, I would say to be very precise, 8 quarters going on, how in 7 quarters, on quarter basis and year-on-year basis, company has grown. So company from BBB minus rating with negative outlook in April 2020 to a AA minus with a positive outlook is a wonderful achievement. So thanks to everybody.
Sure, sir. Thank you so much, sir. Really appreciate. And sir, lastly, anything on progressive dividend payout or buybacks, given our balance sheet is in a fantastic shape now?
You see, when we travel, then we definitely share the cake. So don't worry, the company has been passing through a very, very critical time. Now we are feeling that yes, we will be more comfortable in next 1 or 2 quarters. But this decision we will keep on the board. So on the last quarter results when we declare, definitely we'll put forth the request and we'll discuss. If the board approves, then definitely we'll come back with a very, very investors friendly program.
Sure, sir. Thank you so much and wish you good luck. Take care.
Thank you. Ladies and gentlemen, due to time constraint, we take that as the last question. I now hand the conference over to the management for their closing comments.
Yeah, thank you very much, my friends. And it's a wonderful interaction with all of you. Please don't misunderstand us. We are not a high-cost manufacturing company. We are very slim and trim. We have not increased our cost. There is no extravaganza. This is the reason Mr. Naveen Jindal, our chairman, he always keeps us telling that we will not re-enter into a debt burden. So this is what the slogan is. You wanted that what is next? The next is this. That we all are committed that we will not re-enter into debt business. We have to make this company a debt-free company, net debt-free company. And we are not a steel mill. We are an infrastructure steel mill. Steel making is our backward integration. We are an infrastructure steel mill. We produce steel for all those infrastructures which are coming in this country. We are part of that. Steel making is elementary level, is a backward integration. But the forward integration is that yes, we have to have the products, and those products we are already in. Now we are putting up a hot strip mill with 5 million ton capacity. We'll be adding cold rolling, galvanizing, color coating, automobile grade of steel, roofing, building, construction material. Today we produce 70% long, 30% flat. With addition of another mill, we will be somewhere about 40% long, 60% long and 40% flat. This will give us a holistic view, and this will mitigate our risk in case of any cyclic action, either of the products. We will be fully insulated. So to support our company, and we need your support always. Thank you.
Thank you, IIFL. Thank you, Anupam. And thank you, Lucrative. Thanks everybody for joining our call. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of IIFL Securities, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.